Hi guys, good morning. Welcome to this Money Control live stream. I'm Nandita Khemka and you're watching Opening Bell with me. The setup is looking pretty much subdued this morning as well. Wall Street clocked in a third straight day of losses. Asian markets are following Wall Street peers lower. Although the GIFT Nifty is hinting at some bit of green on the screen, but we'll have to see whether or not, even if we open in the green, whether we manage to defend any kind of gains that we see at open. Because yesterday as well, we started the day on a positive note, but towards the end of the session, all of the gains fizzled out, and the benchmark indices ended the day in the red. Today, of course, it's a weekly expiry, so expect a fair bit of volatility today as well. Let's see whether 24,400 on the downside can be defended or not. Lots to watch out for, lots of stocks in focus. Hindustan Unilever, you have Sona BLW, Motherson Sumi, Samvardhana Motherson will also be in focus given the fact that Tesla has reported very strong set of numbers. The stock rallied 12% overnight. Of course, Samvardhana Motherson being one of the suppliers, Indian suppliers to Tesla, that stock will be in focus. All your stock related queries, keep them coming in on our live feed. We'll try and take them up as well. And, of course, lots lined up over the next 30-35 minutes. Let's start the show then with a look at the top headlines at this hour. Another down day on Wall Street with the S&P 500 clocking third straight day of losses. The Dow sees its biggest daily loss since September as bond yields continue to rise. Asian markets trade mixed while the GIFT Nifty is suggesting a flat to positive start for the Indian market. Hindustan Unilever's second quarter numbers marginally miss estimates, margin contracts in line with expectations while volume growth of 3% disappoints. In key earnings to track today, ITC is expected to deliver a 7 to 8% growth in FMCG revenue, while IndusInd Bank could see net interest margin contract in the second quarter. Also watch out for numbers from NTPC. And the minutes of the last monetary policy meeting show RBI members remain cautious on inflation. Governor Das warns against loosening the restraints too quickly. In fact, new external member Nagesh Kumar dissents, says rate cut is needed to revive demand and boost private investment. Well, with that, let's take a look at the cues for trade then. Of course, yesterday, we did see the Nifty and Sensex give up all of those gains and end largely flat with a negative bias, but mid and small cap indices managed to outperform yesterday with the small cap index rallying in excess of 1% or thereabouts. The rally in IT stocks managed to, cap some of the losses on the index. Of course, mid cap IT was the flavor of the day. You had Coforge and Persistent hitting all-time highs yesterday. And that provided a fillip to large cap IT names as well. So the Nifty IT index was up in excess of 2% yesterday. First Source was also another stock that hit a fresh 52-week high yesterday, gaining in excess of 10%. But another stock that was in focus was Paytm, given the fact that NPCI gave its approval to onboard new UPI users, and that was one of the major overhangs since January on the stock. And that overhang now out of the way, we saw the stock of Paytm rising 9% or thereabouts. In terms of futures and options, that end of the market, we saw the Nifty put call ratio rise to 0.79 vis-a-vis 0.73. Lots of stocks continue to be in the F&O ban list, the new entrant being NMDC. Still in ban, the likes of Aarti Industries, Bandhan Bank, Birla Soft, which by the way reported numbers post-market hours, GNFC, IEX, India Mart, Manappuram Finance, Piramal Enterprises as well as RBL Bank. Three counters have exited the F&O ban list. Those are the likes of Chambal Fertilizer, L&T Finance as well as Punjab National Bank. In terms of fund flows, FIIs, as usual, we've been seeing the FI exodus, gaining pace. FIIs were net sellers to the tune of 5,600 crore rupees in the cash markets yesterday. But domestic buying, continues to support the market. So 6,000 crore worth of stocks were bought in the cash market by domestic investors. Just checking if our technical expert is here with us or not. Chandan Taparia of Motilal Oswal, here with us. Then Chandan, what is your sense? 24,500 not being able to, stay on the charts. Would you expect lower levels today given the fact that it is weekly expiry? And if yes, what is the kind of support level you'll be watching out for? Chandan, is my voice reaching you? All right, we'll come to Chandan and connect with him, but just want to see, what stocks will be in focus. First of all, it will be HUL. Reported numbers post-market hours yesterday. Profit, revenue, slightly below estimates. Margins in line with expectations. Net profit was down somewhere around 4% or thereabouts. Revenue grew 1.5%. Margins came in at 23.5% vis-a-vis 24.2%.
अरे आवाज आ रही है बट कुछ प्रोग्राम ऑडियो अलग आ रहा है.
Was largely in line with expectations. The margin contraction, volume growth of 3% was a disappointment. Expectations were of 4 to 5% growth, but came in at 3%. So that will be a big disappointment. In terms of management commentary, they've noted that rural markets are recovering gradually, but it's the slowdown in urban markets, that's weighing in. But that, according to the management, is a near-term phenomenon. And price growth, pricing growth is expected to come back pretty soon. Volume growth has been volatile, but the comeback being witnessed in the rural markets is a good sign according to the management. There's a smaller growth, there's growth in smaller cities, of course, but larger cities are witnessing some bit of a slowdown. Of course, the company will also be, divesting its ice cream business. Ice cream business, in fact, contributes approximately 3% to HUL's business, and synergies of ice cream business from the rest of the business were very limited, according to the management. So, the separation of the ice cream business, the conclusion and the mode of separation are some of the things. A call on these things will be taken by year end. Ice cream is a high growth but a low margin business, according to the management. The options on the table are either sell or demerge and list separately, or that's the option in front of HUL in terms of its ice cream business. In terms of what the brokerages have to say, JP Morgan has an overweight call, target price cut to 2,870. It's it has, of course, noted that slowing urban demand is casting a shadow on the demand outlook. But pricing and market share growth are strengthening, and volume growth, of course, has missed expectations, and the brokerage has lowered the FY25 to FY26 EPS estimate by 3% on the back of marginal moderation in revenue forecasts as well. But let's touch base with Chandan and figure out if he can hear us. Chandan, if you can hear me. On the index, 24,400, would that be a crucial level to watch out for? What are the support levels to watch out for on the downside, given the fact that 25,400, it's becoming difficult to hold on to that level?
Good morning, Nandita. Thanks for having me. The index has been making lower top, lower bottom on the weekly scale from last 4 to 5 weeks. Already it has corrected by more than 1,700 points from higher levels. And as of now, till it holds below 24,600, any small bounce could be sold for the downside target towards 24,200 to 24,000. So structure of the market is weak, and we have noticed that every meaningful bounce is being sold. So that's why till 24,600 is not surpassed, either be light or go with the slightly negative side in the market.
Okay, go light. That's the view. Just looking at the pre-open, I can see some green ticks on the Nifty Bank Index. 51,000. Thankfully, the Nifty Bank Index has managed to defend that level. Do you see more upside, because HDFC Bank has been providing support, the much needed support that the Nifty Bank Index needs?
So, Nandita, Bank Nifty is slightly outperforming the Nifty index. Nifty is falling more compared to Bank Nifty. And we have noticed that from last 10 days, 4 to 5 times, it held 51,000 marks. It took support at 51,000, headed to 52,500. Even yesterday also, it made low near the 51,100 zone. So from last multiple days, the same supports are providing some cushion to the market decline. So if that is respected, then some bounce maybe it's there towards 51,750 to 52,000. But if 51,000 is broken, then I believe 1,000 to 1,500 points more decline could be there. So Nifty has negative structure, but Bank Nifty has measured support at 51,000. And I believe if that is held, then one can go for slight recovery kind of setup in the market, given the view that HDFC Bank has potential to rally towards 1770 to 1800 zone slow and steady.
Okay, that's the view on the banking pack. But what about FMCG? As a pocket, it managed to hold on to slim gains yesterday. at a time when most of the sectors were trading in the red. But HUL, that will be the big one to watch out for. The positioning in the stock has been, on the sell side. If you look at the stock movement, but do you think post earnings it could make some bit of a rebound, or would you say that the weakness that it has been witnessing is going to continue? Because in the last 1 month itself, the stock has lost some around 11% thereabouts.
So Nifty FMCG index has been making lower top, lower bottom from last 18 days and corrected by more than 10% from its top. So most of the FMCG name are finding selling pressure. However, on the last day, it managed to hold its opening zone. But as of now, till it doesn't surpass about 27.20, it would be tough for the stock to hold. So I'll go for wait and watch. Let it find some stability. Then only we can plan next set of swings in the counter.
Okay, that's the view on FMCG pack. Let it settle down. But let's take a look at how the markets have really opened up. The texture is, tilted towards green right now. It is a positive start, so to say. But still, we haven't really been able to, make a dash at the 24,500 mark. It's a, 20 to 25 odd point kind of an uptick on the Nifty. Triple digit 100 point kind of an up move on the Sensex. The mid cap index is also, trying to hold on to slim gains that it's making right now. The Nifty Bank Index has had a good start. It's a 200 point up move. 51,450 is where it's at. 51,500 almost there on the charts. But I want to see what the IT pack is really doing, given the fact that yesterday it was the top gainer, and we had stocks like Persistent, Coforge, all of these hitting fresh highs. So today, once again, the IT pack. In fact, IT pack has started the day or started its day on a negative note. No big cuts, just about flat with the negative bias. FMCG index is down almost 1%. We'll see how the reaction is, or what the reaction is on the stock of HUL of its second quarter numbers. Autos are holding out. Aside of that, you have metal pack. It's not doing all that well. 0.5% lower for that index. Pharma was the big laggard yesterday. Some bit of an up move coming in there. PSU banks also holding up. Realty pack up 0.5% or thereabouts. So barring the FMCG, IT and metal sectors, most of the sectors are trading in the green. In terms of individual movers, I want to see what HUL is doing. Yes, it is reacting to its numbers. It's a negative reaction coming in, 3% down on HUL at open. Hindalco is the top loser on the index. It's down by 4% or so at the current juncture. SBI Life numbers came out yesterday. Stock is down 3%. Britannia, Eicher Motors, Nestle, Bajaj Auto. So some auto names, FMCG names are among the top laggards on the Nifty. ITC also ahead of earnings is among losers. Even some banking names like IndusInd Bank, Kotak Bank are under pressure as we speak. What's doing well on the upside? It's Trent. That's the top Nifty gainer, up 1.5%. HDFC Bank continues to build on the gains that it has been witnessing since quite a few sessions. HDFC Bank is up 1%. Adani Ports, Sun Pharma, Hero Motocorp, HCL Tech, Cipla are some of the other movers. Looking at the open, Chandan, what would your top recommendations be for the day?
So, post the opening, we have noticed some recovery in Bank Nifty, and that is already there because it has taken support at 51,000, and HDFC Bank is holding the gains. If I need to find out the new trade setup, I'll try to be with the selective name. HDFC Bank will be my top pick. However, heavyweight counter, but supports are intact. Momentum is clearly visible. So with support of 1728, one can look for an upside target towards 1800 marks. Apart from HDFC Bank, I need to focus on selective defensive or few IT names. If I look at the IT, recovery could be seen in counter like Infosys or TCS, or few name might see some breakout and momentum as well, including stock like HCL and Tech Mahindra. So if I have to select one, I'll go with buy on Tech Mahindra. One can buy with support of 1710 for an upside target towards 1790. So two top ideas, HDFC Bank from banking and Tech Mahindra from IT will be our preferred pick at the morning stance. And we believe that selective IT stocks do well, including Coforge and all, while FMCG and other will be under pressure in this market scenario.
Okay, that's the view. Those are the picks coming in from Chandan. But Chandan, what are the charts of Hindalco telling you? That's the top Nifty laggard now, down in excess of 5%. Has anything changed on the charts?
Yeah, chart has totally changed. Earlier, it was finding support at 710 marks. It has broken that level. Gone below is rising trend line and holding well below is 50-day exponential moving average. I believe some more weakness could be there. Technically, it formed double top pattern at 760 and given a breakdown. So 750 is the downside target where we can see Hindalco to get this stability from the selling pressure.
Okay, that's the view on Hindalco. But one stock in focus is Sona BLW. That stock is up 8% as we speak. Numbers were good. And, it is obviously also foraying into railway component business, right? The board has approved the acquisition of railway equipment business of Escorts for a total of 1,600 crore rupees. The proposed acquisition of this division is expected to be earnings accretive for Sona BLW right from the first year and offers significant growth opportunities. That's what the management had to say in its release. Now, this acquisition, according to the management, fits with the company's vision statement targeting growth with a long-term product relevance, which is not limited to the auto sector. In fact, if you see, Escorts Railway Equipment Division is a market leader in railway brake systems in India, and it started back in 1961, and it is one of the oldest, among legacy players in the railway component business. The stock is now up almost 10%, has cleared that 704 or 700 mark as well. Would it make a dash at that 52-week high of 768 today itself? It looks like a fresh breakout, doesn't it?
So talking about Sona, the stock has negated its lower top, lower bottom of last 4 week. In last 25 days, it has seen a corrective move from 772 all the way to 635, and now the reversal is clearly visible. Already we have seen good momentum in the morning tick, but again, fresh move can be seen here. 680 is immediate support. Stock has potential to climb towards 730, 735 zone.
All right, that's the view on Sona BLW. But just want to ask you about two stocks that were the stars, on the IT pack yesterday, Persistent and Coforge. Would you take a trade at these levels because the stocks have hit fresh highs? Or would you say that after the stupendous rally that the stocks have seen, the mid-cap space has, IT space has seen, maybe they could be entering that overbought zone pretty soon?
Yeah, so positive on the IT and especially Coforge looks good. The setup is clearly positive. Follow-up action is clearly visible in the counter. One can use a small decline, but can buy at current level as well. As of now, 74.50 is immediate support. We are expecting this momentum to extend towards 7,900 to 8,000 marks.
Okay, that's the view. I think I can also spot a query on this stock, Coforge, from Nana Prakasam. Hope that answers your query. But let's take up the next query then, shifting focus to the queries that are trickling in this morning. Satya has written in, wants to know your thoughts on Archean Chemicals. His buy price is 550 rupees and he can hold on to it for another 1 to 2 years. Should he hold for a target of 1,000 rupees on this particular stock? Do you think that's a possibility next 1 to 2 years?
Yeah, talking about, I think some recovery can be there, but one need to keep in mind that due to the weakness in the global market, most of the sector and stock have seen some selling pressure. So if broader market recovers, then only the stability will be back in the stock. So you can hold, don't suggest for averaging, but can hold as of now because already some corrective move has taken place in the count.
Okay, that's the view then on Archean Chemicals, but could spot a query on one of the sugar stocks as well, Balrampur Chini. The stock has been in a downtrend over the last 5 sessions. Last 1 month also it hasn't really done much, but we do see spurts of rallies coming in on some of these sugar names. Whenever there is some bit of news flow. Over the last 6 months, the stock has done fairly well. But Srivardhan wants to know. He has positions here and he wants to know the targets for year end. Any thoughts?
Yeah, so Balrampur is comparatively holding well even after the market weakness. The stock has taken support at its 50-day exponential moving average that goes to 593 and exactly turned from the same zone. If I look at the price setup of the last 100 days, it has never gone below its 50-day mark. So I believe you can hold with support of 593 And if manages to hold 615, 620, then you can see an attempt towards 645, 655 in the counter.
Okay, that's the view on Balram Pulchini. Hope that answers your query. I want to take up a query on PNC Infratech. This one's coming in from Adit Taneja. Wants to know your short-term view on this stock. Of course, the stock has seen a fair bit of badgering over the last few sessions on the back of news flow that it is prohibited or banned from participating in government tenders for the next 1 year. We saw a sharp knee-jerk reaction. The stock lost quite a bit of ground over 2 to 3 sessions itself. 5-day move, hints at a 25% downtick on the stock. Already seen quite a bit of a badgering. So for the short term, any levels on the downside that one should be keeping in mind?
No, the weak structure could continue. Already has seen a major damage correcting from 470 to 340, 300 zone. I think weakness could continue till it remains below 350. Over the counter, it can dip down towards 310, 300.
Okay, that's the view. But there's another query that has come in from I think Puneet Rajiv. He has a query on Balaji Amines. Should we hold or sell? That's the question. Balaji Amines, how is that placed now? We spoke about Archean just a while back. But, when you look at the Balaji Amines, I will just pick up the 5-day chart. It's down somewhere around 4% last 1 month as well. In tandem with other stocks, the stock is down 10% or thereabouts. Is it a hold if somebody has positions?
But the stock got stuck in a range, setup is weak, but multiple supports are visible at 2000 marks. So if it is he's holding the trade, then advises to keep the support of 2000. But if you ask me about the recovery, it's very tough. If it moves about 2150, 2200 zone, then only the stability will be weak. So as of now, avoid or wait for key support of 2000 marks.
Okay, that's the view. Avoid or wait for the support levels that Chandan just mentioned. The next query is coming in from Maheshwar Bhanu. Has a query on Engineers India, and he wants to know what kind of levels to watch out for over the medium to long term, say 1 to 2 years. This stock has seen quite a bit of, a downtick in the last 1 month. 20% has been shaved off almost. PSU stocks in general have seen, selling pressure. So where does EIL stand, and with the 1 to 2 year time horizon levels?
So looking at the Engineers India now, it seems that stock has come to major support after a major corrective move in last 15 weeks. Multiple supports are seen at 170, 172. So I think now he can buy with those support. Stock can see a recovery towards 190 to 195 marks.
Okay, that's about Engineers India. Hope that answers your query. I spotted a query on Vodafone Idea as well. I just thought we'll take it up. The stock is below its FPO price. It's trading at 8 rupees. 1 month it has again shaved off quite a bit, in terms of percentage. So here there is a query, I think, coming in from Pooja Khanna. Her buy price is 11 rupees and wants to know whether she should average or hold on or book losses.
I think don't average. Two things. If you already price is 11 and now at 8, if you want to hold, can hold. There might be some recovery at 11. But again, advice is don't want to go for fresh buying. Don't suggest for averaging. If already taken, then can wait. There is only suggestion and solution I can provide as of now.
Okay, that's the view. Hope that answers your query. I can spot a query on a Timken India as well on our feed. Alex wants to know what kind of support levels to watch out for on a Timken. Anything that you would be working with? I'm just trying to open the charts here. The stock is flat, trading with a negative bias, but in the last 5 sessions or so, the stock has been under selling pressure. Monthly charts as well indicate intense selling pressure. Any kind of support that one should watch out for? 3,446 is where it's at right now.
Structure is weak. Breakdown is clearly visible. As of now, I don't see any support on immediate basis. Let it correct to 3,200. I think 3,200 may provide some support from current zone.
Okay, take note of the level that Chandan just mentioned. But there are some queries coming in on office as well on our live feed. Anant Swaminathan wants to know your thoughts on this particular stock. Not it's you can call it a recent listing. Uh, I know the historical data will be limited with you, but over the last few months, the way it has been behaving, uh, stuck in a range in the last month or so, hasn't really been able to pick up as well. Anything, any level to watch out for here, given the kind of data that you already have? Would you advise taking positions here?
No, no, it's better to avoid when we are not clear with the price setup and market sentiment is not good. And most of the mid cap and small cap are finding sustained selling pressure. Better avoid. And I always believe in market when you are getting good name at discount, then why to focus on the sideline counter. So this is what you need to understand and apply in this market scenario.
Okay, that's the view. Hemant has sent in a query on HUL. We've already discussed this talk, Hemant. Maybe you could just go back in the feed and listen to what Chandan had to say. But Anune has written in, wants to know your thoughts on a Siemens. He's making some bit of a loss here, 5% loss. He wants to know, should he average or hold or sell? What would you advise him to do?
So, looking at the Siemens, the structure has turned weak in this last 4 5 days. It has corrected by around 10 12% in the week. Major support goes at 6,500. So let it come to 6,500. Near to those level, you can plan for some averaging or bottom out approach. As of now, lower top, lower bottom is clearly visible, and most of the capital good stocks are in pressure. So avoid, let the major support or more profit booking to be kick on to get the stability in the counter.
Okay, a couple of counters that will be reporting numbers today are, ITC and IndusInd Bank. Is there a trade in these counters ahead of the numbers? Should one look at positioning themselves ahead of numbers? What are your thoughts?
I think let them get some stability. As of now, the setup is weak. Uh, so I think some sort of more profit booking could be there before we talk about any bargain hunting or bargain buying in the counter. And I think numbers and data could play an important role in all these names.
Okay, that's the view then. But with that, I think we've come to the end of the query segment. Chandan, would like to thank you for taking out time and joining in and sharing your thoughts with us. Look forward to connecting with you again sometime soon.
Thank you so much.
Thank you. Well, on that note, let's take a look at what the markets are really doing at the current juncture. As we speak, the Nifty has slipped into the red once again. 24,420 is where it's at. Sensex barely managing to hold on to some, slim gains. Mid-cap index is where it was at the start of the session. But looking at the top laggards on the index, Hindalco is now down over 6%. HUL is down 4.5%. The likes of SBI Life is down 3.5%. So yeah, the earnings reactions, have been pretty sharp, and we can see that play out on stock prices as well. Diverse, reactions. Of course, yesterday it was IT Pack that was reacting very strongly to mid-cap IT names, and today, of course, FMCG names, like HUL, ITC in focus. HUL, of course, reacting to the disappointment in volume growth. Down 4.5%. ITC is the other one that will be watched out for. But on that note, let me bring on board our fundamental guest for today. Joining me is Rakesh Pujara, who's a Smallcase Manager and Founder at Compounding Wealth Advisors. Rakesh, great to have you on the show. First of all, let me ask you about your strategy for markets right now. Given the fact that we have corrected a good 7% from highs. Do you expect more correction, and would you call this a price correction or a time correction? Any more downside from here?
Good morning, Nandita. Thanks for having me. Uh, I think it's more of a price correction. Market was a little bit overstretched, and there were valuation concerns, and earning seasons has also not panned out very well. So that is the reaction of the market, and I think market is 2 to 3% away from making a durable bottom. and I think you'll find a good support in the region of 23,000 and 23,900 and 24,000. So I think around 2% from here, I think market will stable. This is probably the kind of fall that we have seen is on the back of severe FII selling, and I'm surprised market is still holding after 6.5-7% kind of a sell off. This kind of a sell off had happened in 2008, and market had crashed virtually. So I think we are holding up very well, and there is a constant support from there's a constant support from
Right.
DIs as well.
Of course, I want to just point out. Sure, sure. We are, of course, witnessing domestic liquidity, being stable, and DIIs providing that much needed buying support to the market. But yesterday, Goldman Sachs, turned cautious on Indian equities. In fact, they've tactically downgraded Indian stocks from overweight to neutral, citing slower growth. Of course, earnings have been far worse than the muted expectations that we already had. There's cyclical slowdown in some of the sectors that is playing out, the likes of autos, FMCG, and what have you. Inflation woes are still there, as being flagged by RBI yesterday in the RBI's MPC minutes rather. The risks seem to be FII sell-off, as you mentioned as well. Where do you really see Indian equities over the next 1 year in light of all the risks that I mentioned? And of course, let's not forget China. That's also, trying to take steps to revive its economy. And there are already, thoughts that FII money is flowing into China from India. So in terms of all the risks that we are facing at the current juncture, where do you see the markets in the next 1 year?
So large part of the selling that is on account of China market, I think 70-80% is already done. So around 15-20% is still pending, where people would like to withdraw from India and invest in China, given the valuation of China. But mind well, all the long term investors like sovereign wealth fund, pension funds are here for a long period of time. So they are here for next 20-25 years. They are not here for the next 2-3 months, 5 months. So I'm of the opinion the market will find support here. Another 2 or 3% give and take. I think market will find support here. And post Diwali, I think you will see buying resuming post election results of United States. So people are being cautious because of that event as well. There is an event in United States presidential election, and people are a little cautious about that. And I think post that result, bull rally should resume. And for the next 1 year, I'm looking at 10-15% upside on index, and a decent upside on small cap and mid cap as well, because large majority of them have corrected between 15 to 25-30%, and now the people will find some value there.
All right, point taken. But tell me, where should the tilt be at the current juncture? Most of the experts advise investors to now look at large caps. But, data suggests that retail investors are still more tilted towards mid cap. So right now, in your view, should one be tilted towards large cap, or should one look for opportunities in the mid and small cap space? If yes, which are the pockets that one should look at right now?
So we have been cautious since last 2-3 months. I'm a believer of tracking sectors very closely, and we could witness the sector rotation in last 2-3 months. I think money has moved to defensive sectors like IT and pharma and all that, and that is where I will be still invested, because I want to see the durable bottom first in small cap and mid caps, and then probably we can rotate the sectors. Currently, I think we should be with the defensives like likes of IT and pharma, and still wait and watch in small caps and mid caps, and high beta sectors like public sector enterprises. We should wait and watch, allow it to settle. There's been a stupendous rally in last 2-3 years, and we should allow some time as well as price correction, and post that probably we can position our bets back into these sectors. Otherwise, currently we are very comfortable with IT and pharma allocations.
And within the IT space, would you look at mid-cap IT? Because numbers have been far better compared to large-cap peers. Commentary has been fairly bullish. You've seen what happened with Coforge and Persistent. First Source even, they rallied quite a bit. And IT as a pocket, of course, has not seen the kind of badgering other sectors have seen. So within the IT pack, would you be looking at mid-cap IT names more vis-a-vis large caps, till there is some bit of clarity emerging on the discretionary demand front?
Yes, mid caps are looking better than large caps in IT segment, but I will be like equally allocated between mid cap and large caps, given that the chart structure of even large caps are largely in place. You know, they are structurally not kind of damaged so far, and closely look at the charts, and they are still intact in terms of like bull market is concerned, and I will be equally allocated between mid caps and large caps.
All right. And last question, really. If you track the cement space, this space has been hot, seeing a lot of consolidation. The latest one being, Orient Cement acquisition by Ambuja. We had India Cement acquisition by Ultratech as well. Earnings-wise, it was a seasonally weak quarter for the cement pack. But do you think pricing and demand environment will pick up, given the fact that there is potential for infrastructure ramp up post the elections, especially? And obviously, the ongoing competition for market share among major players. Amid all this, is the sector worth paying attention to right now? Cement as a pocket.
See, cement is a long-term story. Like, given the kind of infrastructure spending that the government has done in last 2 years, there is going to be cement consumption. Of course, there is some sort of a slowdown right now in consumption and all that, and that is why it is consolidating. It's a long-term story, and we are quite bullish on infrastructure space as well. So, cement being a part of it, I think it warrants buy on declines kind of a call, and we are positive on cement sector going forward, because large part of infrastructure is yet to be built, and we are in the middle of large infrastructure cycle unleashed by the government spending, and probably it will be taken over by private capex cycle as well. So yeah, we are bullish on cement sector as well, as a pack of infrastructure.
Right, point taken. Last question. Would you place your bet on any of the emerging themes now? We recently saw Wari Energy's IPO closing with very strong demand coming in. Solar, hydrogen. Would you be placing your bet on these themes? Since these are the focus area, both from government standpoint and even from private players. So, would you be placing your money on these sectors?
So IPO, yes, I would be placing, but on listing, I think most of the money would have been taken off the table because very little has been left for the investors nowadays in IPO. And even after this kind of a premium valuations, grey market premiums are suggesting it's going to be a blockbuster listing for Wari. Yeah, Wari, it's a good company, and we do not have anything holding on that, but it's a structural green energy theme. I think it warrants some allocation, and valuations are really, really rich. So I would be really wary to kind of allocate a large part. A small allocation is warranted because you want to track the sector and be in the touch and feel of the sector. On every correction, I think green energy is one more theme we are bullish on, and next 10-15 years, probably we should look at that.
All right, that's about the green energy theme. But with that, we are timed out. Would like to thank you, Rakesh, for taking out time and joining in and sharing your thoughts with
Thank,
us. Look forward to connecting again sometime in future.
thanks for having me. Thanks.
Thank you. Well, with that, of course, we've come to the end of this edition of Opening Bell. But want to point out, we have slipped into the red and almost 90-point cut coming in on the Nifty. So we have given up that 24,400 mark. Sensex is also down. In fact, it has taken out that 80,000 mark as well. Mid-cap index has also succumbed to selling pressure. 0.4% kind of a loss or kind of a drop coming in on the mid-cap index. Nifty Bank index is also slipped to the red. So yes, the complexion of the market has changed once again. Not even like half an hour into trade, and we have given up all of these opening gains, and are now trading deep in the red with the Nifty even below that 24,350 mark. So, of course, turning out to be a choppy day. Down day again. Let's see how things really pan out. If we can, manage to tame these losses a bit and reclaim that 24,400 mark, we'll have to see. But for now, it's not looking good. All of the opening gains being shaved off. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and come back and join us at 3:30 p.m. for Closing Bell.